Today I'll be taking us through an Old Mutual and Sanlam comparison, and then we'll also have a quick look how they compare to the banks, as both the life insurers and the banks do form quite a large portion of the financials index. Looking at executive summary, the current environment, we see that there has been recently an uptick in the lapse rates. This is the pressure coming in on the consumers. We also, if you take it in a broader perspective to the banks, just comparing them to the banks, we see the increase in interest rates coming off low historical levels and going into this, let's say, more difficult times with a healthy consumer. We see that the banks should benefit because they usually benefit from the endowment effect taking place from lower interest rates. Then also currently we have the load shedding that's going on, and there your short-term insurance would usually there would be an uptick in claims due to the power surges that would happen. On a valuation perspective, the insurers are trading at lower historic valuations compared to banks, and then specifically between Old Mutual and Sanlam, Old Mutual is trading at lower valuations. Sanlam has higher growth and profitability that we've seen historically, and then our recommendation is currently we have a buy on Sanlam and a hold on Old Mutual. And what would change our mind is if there would be an increase in the profitability of Old Mutual, this would also translate in higher sustainable growth, and especially in the cost management side also of Old Mutual, as we do expect Old Mutual should see some uptick in its profits because it has a large, about 2.5 billion provision for COVID, which in our opinion we should expect to see reverse soon. Looking at growth comparison between the two, we look at the present value of new business premiums. So this is let's say, call it a sales type of revenue volume metric for insurers that's widely used. You'll note that Old Mutual was reasonably flat over the years, where on Sanlam we've seen more a slight steady increase over the years. These are now half-year periods that you can see in each column being compared here. Then on a profitability side, so Old Mutual has seen a decline in its value of new business margin, where Sanlam has maintained a more steady value of new business margin. This is also due to Sanlam having a more diversified type of income mix, so it's able to keep a more steady levels. We can also see on the return on equity, Sanlam usually being more profitable and being more stable. So this value of new business margin of Old Mutual would have decreased due to your cost increasing in relation to the revenue, because as we've seen in the previous slide, although the revenue side has been remaining stable, the value of new business margin has been decreasing. This also happens if your revenue decreases but you have fixed costs. This will also decrease your margin. Other items that also would cause this is if you see a bit of a mix in your segments, so some segments would have higher margins compared to others.
Thank you very much for joining us today.